Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormiz Fatakia. Hey Hormiz, good morning. Seventh straight day where we are seeing some impact on the markets as we speak. The Nifty at 25,952. It's a 60-point cut as we speak. The mid-caps too down 0.6%. That's where majority of that impact is coming by. I think I have to refresh my rates.
Your rates need to
I need to refresh my rates because the Nifty is seeing gains 42 points. So basically the number is right, but just the up and down needs to be managed. But the mid-cap index, of course, that is flat with some negative bias right now. Nifty Bank too is down by 0.1% as we speak. A lot of moving parts. We do have a lot in terms of specific stock moves as well. So that should be something that should be on our radar. Other than that, if we talk about the mid-caps, yesterday there was some impact. Today, we have gainers in form of Avanti Feeds, which is up 9.5%. Latent Few Technologies, 5.5% higher. In terms of the Nifty pack, of course, it's the IT pack, which is doing really well. 3.5% higher there. We have that for HCLTech. Infosys too, doing well. TCS is the other one, which is pushing the Nifty higher. So let's see whether we we are in the green today and end that way in trade today as well. But recovery is something that is under our radar. But let's go across to Hormiz. He's here with us to put spotlight on the top movers in the market. Hormiz.
Well, there are stock-specific actions aplenty, even though the index continues to face that 26,100 jinx as of now. We'll start off with some broader market names like Lakshmi India Finance. It's a recent listing. It's the second straight day of gains for the stock, now 8% higher in today's session, although the stock is still recovering from its previous three-day fall, the three-day losing streak before this, the stock fall around 15%. But the last four sessions has seen a very sharp surge in volumes. There are close to 10 lakh odd shares traded every single day. Even today's session, we have had close to 10 lakh shares traded. The 20-day average here is only a lakh. And despite this move, the stock remains below its IPO price, which is 158. A news flow driven reaction, KEC International, although is continuing to remain around 6% lower, among the top losers on the Nifty 500 today. The biggest single day fall in the last 8 months for the stock, and it has been an underperformer in the last 3 weeks. As the last 19 trading sessions, the stock has declined in 16 of them. That shows you the underperformance that KEC has had. Today's session, 21 lakh shares have traded so far. The 20-day average is just over 3 lakh shares, so 7x its 20-day average, and the stock now is below all of its key moving averages and down around 40% year to date, making it possibly the first negative year that it might have after 2018. KRN Heat Exchangers is the other one. It's another recent listing, 6.5% higher today, snapped a 2-day losing streak. Volumes are the highest in the last 2 months. We had 15 lakh shares traded today. The 20-day average is just over a lakh, and the stock has moved above its 100-day moving average of 833. Still down around 15% from its 52-week high, but when you compare it from its issue price, which is around 220 rupees a share, the stock is up 4x. And lastly, Avanti Feeds. Well, all of these potential beneficiaries of the US-India trade deal are moving one day or the other. Today is the day of the shrimp names. Avanti Feeds is up for the 5th day running, 10% higher on the stock now. The volumes are the highest in nearly 3 months. We had over 30 lakh shares that have already been traded today. The 20-day average is only 2 lakh shares. The stock is above all of its key moving averages, and after a 60% surge last year, the stock has recovered all of those losses this year, and it's now up almost 22% on a year-to-date basis.
Okay, all right. Thank you so much, Hormiz, for joining us with all those names. But that's not it. There are other stocks which are on our radar. LG Electronics is in focus. There's a note which has come in from Morgan Stanley. Upasna is here with more details on that one. Upasna.
Well, Morgan Stanley has initiated coverage with an overweight rating and a target price of 1864 per share. It believes that the company stands out in many categories in a competitive consumer durable market. The revenue and margin is likely to be driven by company's new capacity addition and exports, and even its rising B2B contribution. Now, on the back of this, it has estimated earnings to fall by 9% on year-on-year basis in FY26, with a 16% earnings CAGR from FY26 to FY28 is what they are forecasted. Now, JP Morgan has also initiated coverage with an overweight rating and a target price of 1920 per share. It believes that the company is an attractive play on rising consumer discretionary spend in India, and it offers best best in class with a superior execution as compared to its peers. It sees a gradual improvement in growth trajectory of the company, which will be mainly enabled by the improving macro tailwinds is what they believe. It further forecast a revenue CAGR of 12% and an EPS CAGR of 21% over FY26 to FY28. So all in all, both the notes are positive for the company, and we can certainly see the stock surging in trade today.
3% higher on LG, so positive. So 12 analysts now cover LG, by the way, and all 12 of them have a buy recommendation on the stock. And Sudarshan is now joining him with yet another positive note that has come in this time around on 361 WAM. Sudarshan.
So Citi has opened positive catalyst on this stock, and target here is 1650, and that implies an upside of almost 50% from current levels. And the reason that Citi has given is recurring flows will benefit from the current momentum that we are seeing, especially in the primary market. Also in the last 2 to 3 quarters, core gross flows into wealth and AMCs have remained strong. That also is one of the positive things for 361. And net flows, though, were marred by attrition-led outflows and planned redemption in private equity that company had undertaken. And Q2 witnessed green shoots in the net flows, but Citi believes that company will surprise on positive side, mainly in Q3 and H2 of FY26. And also carry income and transactional revenue will likely remain robust. And on the valuation front, 28 times FY27 EPS as per Citi, that is encouraging as well.
Okay, all right. So that's 361 WAM. The stock is high at 2% in trade as we speak. But we'll do one thing. We'll slip into a short break. When we come back, we'll focus on the crypto market with Manisha Gupta on the other side.
Welcome back. The sell-off in cryptocurrencies continued, and Manisha is now here to summarize the latest from the crypto markets. Manisha.
Well, thank you for that. Absolutely. If you look at the month of November, all we've seen is decline almost on every single day when it comes to crypto as an asset class. When you look at Bitcoin then, well, we did see prices continue to decline. It actually has been trading below 100,000, traded below 90,000 at some point in time as well, holding around 92,000 as you can see, with 2.5% of a decline therein. Well, the crypto market cap overall has seen around $1.2 trillion of a decline in the last 6 weeks itself. We have seen Bitcoin come off nearly 30% from its all-time highs of 126,000. We've seen a low of 87,000 as well. And it has been a sharp decline, not just for Bitcoin, but various other cryptocurrencies as well. But when you look forward and the kind of decline that we have seen, it's pretty cyclical is what the market says. It happens every 4 or 5 years that you have this kind of a crash coming in. And these perhaps are buying opportunities is what is being said by more than few people there. President Nayib Bukele of El Salvador says that the country has been buying Bitcoins and have bought Bitcoin worth $100 million in just one day. That has been a 17% increase in their holdings on a day-to-day basis, as you would say. So if you look at the overall holding that El Salvador has, the crypto reserve now stands at around $688 million worth. And overall holding by El Salvador of Bitcoin stands at around 7,474 Bitcoins therein. El Salvador, remember, also has been one of the initial countries which adopted Bitcoin as a medium of payment and in sense of crypto reserve within their forex reserves as well. So strong going on to that one. And as the president says, they are buying on these dips as well. Not just them, Michael Saylor of Strategies as well says that he's looking at Bitcoin prices continue to gain up, has been adding Bitcoin to the corporate treasury for a very long time now, and says that 200,000 is what you could see by 2026 end, and it's likely to hit $1 million in the next 4 to 8 years is also a statement coming in from him. Take a look at what Standard Chartered has to say about Bitcoin forecast going forward, and they anticipate a 300,000 of a target by 2026 end. Bernstein says 200,000 is possible for Bitcoin in the early part of 2026 itself. JP Morgan has put out a statement suggesting that 170,000 is what they're watching for in 2026, and a very bullish statement coming in from Fundstrat at 500,000 of a possibility in next 5 years as well. So as I said, there is a crash, yes, and a big buying opportunity according to many.
Okay, all right. Thank you so much for joining us with all those details, Manisha. That's the update coming in from the crypto world. But we'll slip into a short break. When we return, we'll discuss the India-US LPG import deal and a lot more in the oil and gas space with Dayanand Mittal from JM Financial Institutional Securities. Stay tuned for that. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Let's get in Dayanand Mittal, who is oil and gas and telecom research analyst at JM Financial Institutional Securities, to understand the landscape when it comes to oil and gas space and some questions on telecom sector as well. Dayanand, good morning. Thank you so much for joining in. Well, a lot is happening when it comes to the oil and gas space. The recent one being the India-US LPG import deal. Can you give us a sense of what it would mean for the country, especially OMCs? What was the sourcing so far, and how does it change things for them?
Yeah, good morning. Yes, lots happening in the space. This LPG import for the first time in the history. So instead of importing from Middle East, for most of our import requirement, they're diversifying to US, partly also to get India-US relationship back on track, given US wants India to import a lot of their energy, LPG, starting with LPG and crude for the moment. So from OMC's perspective, obviously, though we don't know at what price this LPG would come to India, hopefully it might be at some discount to the Middle East LPG prices. And this should help OMCs to reduce some of these LPG losses which they've been incurring over last couple of years. Already the losses have come down significantly because of the sharp fall in crude price and hence Saudi's LPG prices. Maybe this 10% import from US further helps to reduce those losses. So some marginal relief. I would not read much into this because we don't have much details about the pricing. But yeah, incrementally should look relatively small, kind of a slight benefit for OMCs, I guess.
But will that, Dayanand, help reduce the losses that the OMCs are facing currently?
So just to give you that context, so FY25 LPG OMCs were losing almost like 200 rupees per cylinder on LPG. That led to about 400 billion INR under recovery for the year. In 1H, that loss has already come down sharply to less than 100 rupees per cylinder. In 3Q or currently, the losses have already come down even below that. It's now only 30-40 rupees per cylinder, so it's not very sizable. So yeah, but even that can go down further. Maybe with crude being soft, that we might be closer to the break-even level for OMCs. The import from US is only for 10% of our LPG imports. So obviously, that way 90% still dependent on Saudi.
That's right. So, Dayanand, are we seeing any impact of reduced Russian crude imports in margins so far? Or do you think, considering that discounts had reduced, it wouldn't have much of a problem for these oil marketing companies?
So, my sense is if India and maybe China reduce Russian crude imports, then chances are discount might widen and not go down. And that's what we are also hearing a bit. The discounts have widened slightly from $3 to maybe slightly higher. But the quantum of crude that we used to import from Russia, about 30 to 40% for various refiners in India, my sense is it will go down maybe half of what they were used to import, given US will be US sanction on the two large Russian companies, Rosneft and Lukoil, which kind of largely produces and sells over 50% of Russian oil. So at least, and that comes into effect from 21st of November. So my sense is to stay away from those sanctions risk, few companies might decide to completely switch it off, and few might reduce it by 50-60%. So OMC's refining margin, or for that matter, all Indian refiners GRM were boosted by about $1 to $1.50 per barrel because of the Russian crude discount. So maybe that benefit get reduced to half, maybe something like $0.50 would be the new normal in terms of the incremental GRM because of Russian crude. But good part is diesel cracks are very strong, so that largely offsets these concerns.
Fair. But Dayanand, you mentioned that the losses that these companies are facing with regards to LPGs, that might narrow down further. But from a consumer perspective, does this import from the US mean costlier LPG for the consumers? Because the transportation costs would be a lot higher from the US compared to, say, from the Saudi.
Yeah, so my sense is consumer prices may not move up. As you'll recall, last 3 years, there were 200 rupee per cylinder loss that OMCs were incurring. Still, they did not change the prices much because LPG continues to be a regulated product. So government decides the price and not the oil marketing companies. So even if because of this transportation cost, in case the LPG prices from US were to be higher than what they get it from Saudi, I don't think the end product price will change much. So because of transportation costs, maybe if OMC's LPG losses might go up or down a bit depending on the net delivered cost that US LPG costs us.
Quickly, Dayanand, if you can tell us what are the top picks? What do you make of city gas distribution companies? This time they did see some margin pressure. Do you think things could reverse for this particular space?
So overall on CGD space, we have a negative view, particularly on the CNG dominated companies, because this APM gradual decline is a key structural challenge, which will keep margin and volume under pressure. So we have a negative view on the CNG dominated company, which is IGL. But given the stocks have corrected, so yeah, I don't see much downside on IGL from these levels. And plus they've got recent few reliefs in terms of reduction in the transportation cost, plus some rejig in the VAT on Gujarat, VAT on gas that is sourced from Gujarat. So maybe they have some margin cushion in the near term. MGL, we have an ad rating, but that's more because of valuation ground, given the stock has corrected quite sharply over the last 3-4 months. Our preference in CGD is more towards Gujarat gas, but that's more of a commodity call that we believe spot LNG price, which is key for Gujarat gas, that should moderate by end CY26, given almost 30 to 40% capacity addition is likely on the LNG export front, led by US and Qatar. So that should help Gujarat Gas regain some of its lost competitiveness versus propane.
Dayanand, thank you so much for sparing time and joining us today with your views on the latest trends in the oil and gas space and, of course, the city gas distributors as well. But the latest in the Jayaprakash Associates resolution, creditors have unanimously favoured Adani Enterprises' bid. Let's go across to Ritu for more details on this. Ritu, tell us what you're picking up.
Well, yes, Hormaz, it is a big development in the resolution, the long-drawn, I should say, resolution of Jayaprakash Associates. And it looks like we finally have a winner because sources are telling us about 90% of the committee of creditors, which is led by NARCL, has voted in favor of Adani Group's bid to take over the company. And here's the key factor. NARCL alone controls about 86% of the total voting share in the COC. So its decision has virtually sealed the outcome of this, of this voting round. Now, some of the lenders, including SBI, ICICI Bank, for instance, that have sold most of their loans to NARCL, but they still held on to a very small exposure, together less than 3% of the total vote. They chose to abstain, but that didn't really impact the final direction of the vote. Now, as to why Adani won the lenders over despite Vedanta offering more money overall, sources indicate it was the higher upfront payment in the Adani proposal, which was the clincher. Now, as we've been reporting, Adani Group had offered a total of 13,500 crore rupees, and that included about 6,005 crores as upfront payment to the lenders and another 6,700 odd crores after 2 years. So in net present value terms, Adani's offer was evaluated at around 12,000 crore rupees for the lenders. Now, Vedanta, on the other hand, had put forward a larger overall offer during the Swiss challenge process, which was roughly around 16,000 crores, but only 3,770 crores upfront and the rest over 5 years. Now, we do understand Vedanta tried to attempt to restructure the payment schedule such that it increases the upfront portion, but sources indicate that lenders and the resolution professional did not accept that change because the Swiss challenge window had already closed. So with the vote now complete, lenders are preparing to issue a letter of intent to the Adani Group. And next, of course, the resolution professional is going to file the application with the NCLT seeking formal approval to close the process. Now, keep in mind, JP Associates has claims of more than 57,000 crores. So, irrespective of which of the offers they've picked, and now it's Adani's, there is a steep haircut for them.
Okay, all right. That's an important update. Thank you so much, Ritu, for joining us with all those important details. So that's the JP Associate story. But with that, we'll move on and get in Jay Thakkar from ICICI Securities for a quick technical check on the markets. Jay, good morning. Thank you so much for joining in. Well, what are the next important levels to watch out for on the Nifty?
Good morning to you, Sonal and Humaz. 26,100 range, that is very clear now, Sonal, on Nifty, because that's the range which Nifty has tested in the recent time for almost more than 5 to 6 times now, and it's not able to surpass those levels. In fact, in yesterday's weekly expiry too, if you see, Nifty did attempt to touch or take off those levels of 26,000 levels, but then it was not successful in doing so, and then we saw Nifty again slipping towards the levels of 25,900. So I think so this range of 25,700 to 26,100 is what within which we expect Nifty to consolidate. Post which we would see a breakout on the upside. That is quite likely, and the likeliness is because of the two major reasons I would point out. One is the banking index, that is the Bank Nifty, which is very well trading above 58,000 to 58,500 mark. Until those levels are held, I mean, the overall trend for the Bank Nifty will be positive, right? And we expect that, if the private sector banks from here on bounce back sooner, then that will help the index to move on. The second factor would be the Nifty IT, which has so far been a laggard and was weighing pressure on the Nifty and, was struggling to move higher. Now, that has made a very strong comeback in today's trading session, by more than 2.5%. And most of the heavyweights within the IT names are now clearly forming a good base and forming higher tops, higher bottom. Along with that, we are seeing some short covering because that is where we have highest shorts. So if banking and IT, that is a 50% of the index almost, if that is looking positive in the near term, then the probability of this consolidating range, so not getting broken on the upside, is quite high.
What about specific stocks there?
Sure. So since I've named, Homers, I've named IT. So as a disclaimer, we would say that we are bullish on IT, and we might have recommended few stocks out of this to our clients as well. But then I think that TCS could be the stock of the series for December, and the kind of reversal which we have seen there. So on the upside, we are looking at around the targets of 3,400 to 3,500 in the near term, at least for the December series. And we believe that 3,060 now, 3,060 will act as a very critical support. So with that as a stop loss, this could be a good buy. The risk load is favorable out here. And second buy recommendation would be, from the auto pack. Now, auto is one sector, which is continuously moving higher. And overall, I think that M&M, Mahindra & Mahindra, is one stock which we are bullish on. It's been consolidating in the range of, say, 3,700 to 3,750. I think on the upside, it can reach towards the levels of 3,900. One can place a stop loss below 3,640. So M&M from the auto and TCS from IT, I think these two are looking clearly bullish.
All right. Okay. Thank you so much, Jay, for joining us with those technical bets. With that, we'll do one thing. We'll sip into a short break. When we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. Still around 40 points higher on the index, continuing to remain around that 25,950 mark. Not much of a difference since from when we began the show. Take the conversation on the markets forward with Shahzad Madan, the MD and CEO at TCG Asset Management, who is joining in. Shahzad, good morning. Thank you for joining in. I was reading your transformative growth portfolio. You've mentioned that you're 87% invested across 16 names as of last month. If you could first briefly take us through your portfolio construct, and then we go into your individual holdings.
So, Hormaz, thank you so much for good morning to you, and thank you so much for having me on the show. So we describe the TCG transformative growth portfolio as a high growth, high conviction portfolio. So what this is a private equity like investment approach. So what we're doing is, of course, we're investing in public stocks, all listed stocks. But the type of stocks which we do is what we seeking to buy those stocks which we believe can outperform the market and give meaningful outperformance over a period of time. If you look at these stocks, typically there's a lot of diligence which goes into it. It is very focused. Stocks, we take big bets in stocks based on a lot of the work we do, a great amount of diligence. We're ready to come in early and wait very patiently. In terms of the approach which we take, in terms of our buying our stocks, which is it's all bottom up. We're very selective in the way we create our portfolio. So the way we've created our portfolio is over a period of time on those stocks and at those prices which we believe there is a potential for return. So when you look at the way we've created it, it's not we buy stocks at prices which we are very particular on. I just add the following, that our stocks have showed, which comprise part of the portfolio, have showed well over 20% growth in the past. And it's our estimate that these stocks will grow at about 25-ish%. That's our internal estimates in the future. Stocks are trading at around 17p 2027 earnings, which we believe is given the earnings growth is reasonable. High ROE, that's something which we're very focused on, and very low debt equity. So if you look at it, in fact, most of our companies have negligible debt on their books. It's typically companies which are growing from their own capital. Another thing which is very distinct, it's very distinctive. There's not very much common with the index. So it's absolute bottom-up stock picking, which we believe can deliver growth over the longer term.
Okay, so when you're talking about bottom-up approach, so I would not ask you what you're making of the sector in which that particular stock is, but asking about your top holdings. You have Intellect Design, 8.7% weightage to that particular stock, DB Corp 7.5%. Let's start with Intellect Design. What do you like so much? You indicated that all these stocks will see 26% CAGR going forward, but why Intellect Design and not any other stock from the IT space?
Hi, Sonal. The way we see it, like we mentioned, bottom up, we see this is a company which is in the product space. It's been working on the banking and the financial services business for very many years, created a niche. And as they grow and as they get more into the sector, you can see that you're having increasingly far more of revenue which comes through from the, let's call it from the fee which comes on a steady basis. Consequently, what you're looking at is very steady earnings growth. We believe that when you look at this company over a longer term, given the valuations, very reasonable. You look at and a very, very long runway of growth in this space. So this is not your conventional IT company. This is an IT product company, which we believe has a very long runway of growth, and consequently, it is our top holding.
Shahzad, I was very intrigued with Sonal mentioned DB Corp. Of course, the DB Group, of course, one of the largest circulations of newspapers in the northern part of the country. But with the advent of social media and with the advent of more digitalization of news, the print media space as a whole has taken a bit of a backseat. Even don't talk about these stocks a lot in general, be it DB Corp or be it HT Media for that matter either. So what is driving this conviction of yours on DB Corp?
Sure, lovely. Thank you for the question. So look at DB Corp. You're buying a stock which is a leader in its space. So in the Hindi heartland, by far the leader, right? Generates a lot of cash, high ROE, no debt on its balance sheet. Uh, uh, Normal growth over a longer period of time for the print industry would be around 7 to 8% earnings growth. They've delivered more than that in the past, but let's just say at least 7 to 8% earnings growth, a 6-ish% dividend yield. So you're already very comfortable in, from an earnings growth perspective. But what's very important, and this is really what the story is when we call it transformative growth, it's what's happening there. Look at the investment which they've been making over a period of time in the digital side. They've they've created extremely good digital assets over a long period of time. They've been investing, they've been expensing it through their P&L, everything out there, expense through the P&L. Subscription revenue is very small yet, but we believe it will come in. So over and above that, so this is something which is there. So this is the normal thing which you might get in terms of organic growth. But very importantly, there are two regulatory changes which we believe, have the potential to add a lot of value to the stock. One of it is the following, that today the bulk of the ad revenues go to the let's call it to the search engines, etc. Increasingly globally, there is legislation, and in many countries, not just developing countries too, there is legislation which is coming in place which says that they need to share the revenue with the actual content provider. That you've already seen that happen. You've already seen companies, search engines sharing revenues with the content creators. That's already happening. We believe that trend will only accelerate, and that will be very meaningful as it is overseas. Over and above that, also when you look at the AI, what's happening on the AI side, it's the same theme. Early days yet on that one, but this is what we mean that buying. This is the non-consensus view, coming in early, waiting patiently. We believe there is very little downside and potentially a lot of upside in this stock.
Take that point, Shehzad. Thank you so much for joining in. We wanted to ask about all the stocks, but I think that will be for some other time. But that's an interesting thesis, and we would like to know a lot more as well. But with that, let's move on and take a look at the markets. It's a 52-point uptick on the Nifty as we speak. Mid-caps have also seen some recovery from the lows. We'll see whether that continues or not. For now, closer to the day's high, that's where the Nifty is. The new listing, Tenneco Clean Air, that one is up around 24%. We have Avanti Feeds. We spoke about that stock, up 9% right now. Other names from the broader markets, you have South Indian Bank, which is up 3.8%. Ather Energy is up 2.5%. Rise Industries, that stock is up around 2%. So a lot of moving parts in the markets as we speak. Other than that, if we talk about some other buzzing names, Latent View Technologies is up around 6%. Linde India is the other stock on our radar, up 4%. So be it earnings or not, there are some big movers in the markets that we should be putting our spotlight on. But let's get in Mangalam now. He's bringing us the latest trends from the F&O space this morning. Mangalam.
Well, it's, like a relay where the baton shifts from one sector to the other on the frontline index, and the Nifty continues to hold on to the green mark. And today, it is the IT pack. So if you look at it, the Nifty Bank has been doing the running for the last couple of trading sessions. The interesting thing about IT is that, India did not participate in the global rally that took place in AI because we didn't have any participation. But on the other hand, we saw a decline in the IT stocks because there was belief that maybe there could be an impact on the listed IT companies in India. Now that the global IT trade or AI trade is unraveling, India looks like it is an outperformer, and at the same time it's the IT stocks which are doing well. And typically when the large cap IT does well, the broader IT names do a lot better, which is why we are seeing a big move on L&T Tech Services, Intellect Design Arena, the names like Persistent, Coforge, First Source. Among the top 10 F&O gainers, 6 or 7 belong to the IT pack, the mid-cap IT pack in particular. Nifty Bank has had a strong run. So around that 59,000 mark, there is some sort of cool off, some supply after hitting a profitable, fresh all-time high over the last couple of trading sessions. The question is, after this pause for breath, does the Nifty Bank continue to move higher as well? And if the Nifty Bank and the IT index continue to move higher in tandem, then the Nifty would sustain above that 26,000 mark. If not, then the cool off that we're seeing from 26,000 to 26,030 thereabouts over the last few trading sessions will continue as well. So that's something we will have to monitor. The 25,900 put writers are fairly active, telling you 25,750, 25,800. All the options that expire next Tuesday are seeing some support here. But on the way up, 26,000 call writers are equally active. The only difference between 26,000 call writers of yesterday and today is that the ones who are writing that call today are hoping for some resistance around 26,150. Whereas the ones who were writing it yesterday, because it was expiry yesterday, they were hoping resistance around the 26,000 to 26,030 mark itself. Fresh long seen on HCLTech. We've been talking about the IT pack, but other stocks are doing well too. So Sona, BLW, Max Health, all of them fairly well bid in trade today.
Mangalam, thank you for that update there from the FNO desk. Take a short break. Our big story on the other side. Stay tuned. Welcome back. And the big story, of course, is Grow. We've been talking about it ever since it listed, the sixth day of its trading, and surprise, surprise, or may not be surprise, but it's a 10% lower circuit now on the stock. The price band was revised today from 20% to 10%. And of course, as of yesterday's close, the stock was up 90% from its issue price. So now seeing a bit of a cool off from those elevated levels. And as of right now, at this price, there are almost 1.6 crore shares worth of pending sell orders that are still at the NSE as per the latest data as of now. What happened yesterday, of course, was a money control report that said that more than 30 lakh shares of Grow were pushed into the NSE auction window, which according to analysts that money control spoke to say that it is an unusually large quantity. Now, why did this happen? Now, this happened actually because there were traders who were projecting the stock, this post-listing rally to cool off a little faster than anticipated, and hence they ended up shorting the stock. But contrary to their expectations, the stock ended up rallying even further, and as a result of which they could not arrange for the delivery of those shares during the settlement day, and therefore the stocks were pushed into the auction window. Now, there are certain concerns with regards to Grow. Of course, the stock price surge aside, the fact that there is very little float in the market, most of it is still at the promoter level and is still locked up, so there is little free float. There has been this sharp run up, and historically we have seen that every time a stock has run up very sharply on within a first few days of listing, it cools off equally fast. The Urban Company being a case in point, the stock went up to 200, now it's at 130, 140 odd. Lenskart too made a post listing high of 438, it's down around in today's session. Still both of them trading above their IPO price. It's just examples that I'm highlighting. These are some concerns, of course, not specifically applicable to Grow as well. The other important triggers that lie ahead, of course, first one being on Friday, the results that come out, and of course on the 10th of December when the 1 month shareholder lock-in period ends. So that will see more than 140 million shares free up for trade. So as of now, Grow, 10% lower circuit, more pending sell orders. It'll be interesting to see where the stock goes from here.
Oh yes, it has been the talking point since the time it got listed, right? Things are just there's some or the other update every other day, let's put it that way. So Grow on our radar, 10% lower as we speak. But what we'll do now is look at the markets, and there is some further recovery that we are seeing right now. The Nifty is up around 66 points. We do have the mid caps, which are higher in trade as we speak. But we'll do one thing, we'll slip into a short break. When we come back, we'll discuss specific stocks and the market moves as well. Stay tuned for that. Welcome back. 60-point uptick on the Nifty. The Sensex is higher by 230 points. Mid-caps are also recovering a tad bit. But yes, Bank Nifty, that is the one which is under some pressure. But recovery is something that continues to remain the big story. We'll keep tracking that for you. But for now, it's a wrap on this edition of Trading Hour. Stay tuned. All the market action up ahead on Halftime Report.